We have about $25 million of capital invested on those 10 projects. And that also includes investors that, again, are part of our network. Accredited investors, people that want to diversify a bit, especially now with what's going on and the volatility of the economic markets and the stock market.
I'm Kevin Attride, and I'm on a mission to help you with investing secrets, empowering you to succeed financially, changing your financial perspective and growing your wealth in good times and in bad. And when the next crisis comes, those prepared to weather the storm will achieve great success while the world melts with fear.
Investing Secrets with Kevin Attride.
Today, I'm really excited for you to join us. I have an expert in real estate investing from a passive perspective. John and I have known each other only a few months, but I was just blown away at what an amazing guy he is. His incredible intensity on helping investors, but also how he wants to build trust with people to be a blessing to them. John, thank you for joining us today.
Thanks, Kevin. It's an honor to be here. Thank you so much. And I'm really excited. I was looking forward to this all week.
So, John, tell us a little bit about yourself, your company, and just a little bit about your experience.
I joined the Navy. I was a naval aviator for 20 years. You can see some of the aircraft behind me that I flew. And during my time in the Navy, I kind of got into real estate about halfway through. I learned about active real estate, owning property, the insides and outs of how to invest. And it was quite exciting. And then for the second half of my career, I became a passive investor, investing with friends and family that had investment opportunities where I could kind of be a silent partner passively, but still be part of owning real estate and being part of an investment opportunity, which is so exciting. Got back to from some Navy service time to DC back in 2012, 2013, and I decided that I wanted to open a business to really be centered around real estate and really taking that passive mindset, that passive investment strategy I learned and turning it into a business. And so today I own a company that basically allows passive investors who are friends and family and are accredited investors that we've met, about 180 of those folks. And we bring in projects from the active side of the investment through investment partners who are sponsors and borrowers that have viable real estate projects. And we act as the liaison between those that are bringing the projects into us to review, and then the investors who can come in and join us to be part of a real estate investment. And that business has now been up and running since 2013, about 9 years.
Today's episode has been made possible by our presenting sponsors, Wellings Capital, build wealth by investing in diversified, recession-resistant commercial real estate. Smeed CPA, the next frontier CPA firm for strategic investors. And Living Wealth, bank on yourself with private family financing.
John, I'm really interested to hear from you on some practical tips or secrets that you have on investing, changing financial perspective, especially, we live kind of in some challenging times.
Yeah, that's a great question, Kevin. We're no longer in the industrial age. We're in the information age, right? And I think that folks have access to information, even free information online that they can dig into that would really help build their understanding about investing. If you want to get into real estate, that's great. If you're just starting out, that's great. You kind of have to first get the basics. Like, when we went to school, we started on how to read, write, and do arithmetic, right? Just like in real estate, same thing. You want to grow that understanding, that foundation. There's so many good people out there. I'm not endorsing anyone, but like Robert Kiyosaki and Brett Cardone and a lot of people out there that have done this and done it well, written books about it. So, I'm a big fan of not recreating the wheel. Go out and really grow an understanding of what you want to do in real estate, whether you want to get into the mortgage lending side, you want to be an active investor, cash buyer, renovator, or an investor, a passive or active investor where, you are having others invest your capital just like you would with the market. For me, again, read those books, got those understandings. I still have them because I go back because they're good not only for me as a businessman, but personally, as I grow my wealth, as I grow my business and myself personally, as I take care of my family, you're always wanting to get back and refresh not just from the basics, but also what's going on in the market. As we're seeing now, things are changing. Interest rates are going up. Inflation's rampant. So you want to get in and try to, read information, read periodicals that have good factual data. If you want to be a passive investor, my recommendation is, again, get into it, understand it. First, see if you could do it. Do you qualify for what is called an accredited investor? And your listeners can look online. It's pretty easy to find that. But if you do qualify as an accredited investor, you have a check in the block that now allows you to access real estate investments and investments in general that are only open to a unique group of folks that qualify for those. Typically, they're called private placements. And private placements are only open to those individuals that are accredited. The folks that can't invest in those who are not accredited can invest in things like a real estate investment trust, so they can invest in IPOs or stocks that are based around real estate. There are some crowdfunding sites that non-accredited investors can invest in, which basically are sites that showcase deals from sponsors or those that are doing the active side of the investment. Those are the folks we partner with to bring projects in to invest on. There are sites out there that allow non-accredited investors to invest as little as $1,000, let's say, per project. But the knowledge is very important. The understanding if you can qualify to do this. And then once you realize those things, then it's really getting to know the type of folks you want to work with. Who are the sponsors you want to work with? What are the locations, the markets you want to work in? What's the level of risk? Do you want to invest on something that's paying you a cash flow return, which is a little bit less of a yield than a larger development opportunistic deal where you could make a bigger yield, but there's a lot more risk. So you got to decide for yourself, hey, I have $100,000 and I want to put $20,000 or $25,000 towards this. What level of risk am I willing to take? And those are the types of things we discuss with our investors. We're not broker dealers. We're not the type of folks that give advice, but we do give feedback on our experiences. And then we always obviously tell folks to talk to their registered investment advisors or their certified financial planners so they get the true, unique, or specified criteria or parameters for their scenario. But for us, that's kind of how we look at it. We look at the sponsors, their experience, what cities they're in, the markets we like, which I can tell you right now, Washington, D.C., the Southeast, we love those markets. And then what's the asset class you want to get into? What are the types of returns you want to get based on the level of risk you're willing to insert?
When you talk about sponsors, go deeper from that aspect.
Sure. So a sponsor is an individual or company that actually owns the project, owns the property that they're looking to either build on, improve, and basically take it from start to finish. They're in charge of everything from going out and signing recourse or guarantees on debt or bank monies that are needed for a project. They are in charge of going out and getting architectural drawings done, getting the civil engineers out. They deal with the general contractors. They go through the process of getting the designs approved and all the way through permitting. So they're the kind of quarterback of the football team. They're in charge. They're liable. They're held accountable to go out and do all of those day-to-day operations that are required of an active sponsor, an active investor. So if you or I went out and bought a property and we owned it, we would be that active investor because we own the property, we're liable for it, we want to get tenants in there, we want to improve it and sell it. That's active. Passive is more, hey, I want to just bring in money or I want to bring in some sort of resource to help the sponsor as they go forward in that process. And what our company does is we partner with active sponsors to help them bring in the money they need to execute the project. And so we have the term we use is capital stack. They're going to have a cost associated with their project. And just like you and I, if we go out to buy a home, we want to get some money from the bank, usually anywhere from, let's say, 50 to 80% of that money we need to buy a home comes from the bank. Well, what the bank's going to say is, hey, I'll leverage you that money to buy the property, but you need to bring in the other percentage that I'm not going to bring in because we want you to have some what's called skin in the game. So for you and I to buy a home, we bring in equity. right? We bring in money we may have saved, or we liquidate assets to be able to buy that house in order to get that bank debt and bring in that money. So we're part of that equity piece that comes in to help the sponsors, the active side, from when they get their debt. We bring in some of that other equity that gets them that 100% capital stack to go out and do the project. So for instance, if they need a $10 million cost to do the project, and let's say the bank's bringing in $8 million, 80%, we'll be part of the $2 million equity that the sponsor is going to need to bring into the project. We'll bring in up to 90% of that, or 1.9 million. And then we want the sponsor to bring in $100,000 of skin as well to have some money in the project. So that makes the capital stack whole. And we're part of, again, that equity piece. So what we do is when we partner with these sponsors and we approve them for funding, we go through the process. And this is what an investor would do anyway on their own, is we verify that they're a good fit for us.
We'll go deeper into other things that are practical, other secret, the secrets you've gained over your many years of investing yourself.
Yeah. So personally, when I invested, and this has kind of been something we've brought over to the company, is obviously making sure that when you look at a project, you know what to look at. You know the due diligence that needs to be conducted on a project. The demographics of the market you're investing in, why those markets are primed for good real estate investment that support the returns you're going to get. What's the supply and demand structure? What's the population? Why is that a good area from the fact that it's growing? Are there businesses moving there? Headquarters, corporate businesses? How many jobs are those creating? Is there available land to build on? Is supply constrained? So these are the things we're kind of going through on our checklist of items that as an investor, a passive investor, you're going to want to look at to really get an idea. Somebody asks me, why are you not investing in New York City or Chicago or California? And listen, I'm nothing against those countries, but they're just not country states that I would want to invest in, given their economic climate or the regulations or the way that they're set up for policy wise, as far as in bringing in investment. It's just very constrained, very, very high barrier of entry to invest in those markets with a lot of risk for the level of return that we need to get. So that's why we're in markets like Atlanta, Georgia, Charlotte, North Carolina, Fairfax, Virginia, Richmond, Virginia, Frederick, Maryland. Those are the markets we want to be in because there's stories behind those markets. There's a reason that supports economic growth in those markets. And that's one of the big reasons we look at and why we want to invest in those markets. You also have to have a sponsor that knows what they're doing. If we're working with a sponsor who's very good at the multifamily asset class and then says, well, I want to start doing senior living, my first question is, all right, well, do you have anybody on your staff that's got the expertise? Are you bringing on another co-sponsor that can walk through that and be the operator? If the answer to that is yes, then we'll be willing to take a look. But if the answer to that is no, then my question is, well, then why are you leaving multifamily when you're really good at it? So those are just some of the questions you want to ask. There's other things like, fees. How much in fees do the sponsors take? How does it compare to the market? You get these wonderful packages called investor decks or offering memorandums that are done very nicely and neatly. And if they're not done well, it's a red flag that you want to look at. But that's part of the process of getting to know a new sponsor. But when you get those packages, you want to make sure that the data that the sponsor shows you that aligns to their underwriting or why the deal works is complementary to what the market's showing. Because you can get a sponsor that shows, hey, I'm doing this, this, and this, and it looks great, but then the market's not showing that. It's showing a 30 or 20% reduction or disparity on the lower end to what the sponsor's showing. And that's where you would ask those questions. I have a meeting today with a sponsor that great package, everything looks good, but they're starting their investment at a 15% rise in rents from where they are now. And their rents are going to be bumping up at an appreciation level that we're not seeing in the market. So that to me is, all right, we got to pull that thread and find out. So those are the things you want to look at. And for us, our company does that. Our company does that due diligence. It does the validation and verification of those businesses so that when we bring a project to our investors, we want to kind of have it on a silver platter for them so that they can look at it, be comfortable with it. Because these people that invest with us, they have their own jobs. They're doing something where they're an expert at. They're a physician-based person, or wherever they are, specialty type of occupation, and so they don't have the time to do what we do. So that's one of the benefits with us, and some of the practical things you need to think about. There's a ton of other things, but for us, the sponsor, the location, and the risk and the returns are really our top three.
I'm interested when someone is that novice and they say, I'd really like to do something with real estate, whether they're accredited or not. What are just some of the basic things that they need to do?
Yeah, Robert Kiyosaki talks about in his book to build a team. Build your team. And who's on your team? Well, you want to have experts on your team. So you want to have a registered investment advisor, right? A registered investment advisor is kind of like a CFP, a certified financial planner, but they're more in the world of alternative investments. Those are the guys that are looking at private placement, which is what we do. They're looking at crypto. They're looking at energy. So those are the folks that have more of a keen understanding of private placement. So if you figure out, hey, I'm accredited, and I want to invest in real estate, or I want to invest in alternative investments, could be other things, I want to have a registered investment advisor on my team. That's number one. Number two is I want to have a really good accountant. Why? Because there's a lot of tax implications with these investments, whether it's real estate or something else. You want to have an accountant that understands this, right? Because they're going to be doing your taxes. They're going to be giving you tax guidance, and they're going to be giving you tax insights to how to set up, whether it's, hey, you need to set up an S-Corp business as an LLC because you'll be able to write taxes off here. So that's another person you need to have on your team. You need to have mentors. You have to have people that are doing these things that you could either follow on a podcast, you can reach out to and talk to. Start with your friends and family. If you're a crypto investor or you're a real estate investor and you want to get into it, talk to the family members that are doing it. What are some of the things you're doing? How are you doing it? What are the things I need to learn about this? Do you want to partner together? I'd love to give you some money and see how that works. That's the third aspect, is mentors, family, and friends that have done it and are doing it. Good banks. You want to have a good banker in case you need to have the right accounts set up to be able to invest into these things. So yeah, again, put your team together. Get a yellow pad, a legal pad, and write out who's on my team in order for me to do this successfully. And then, maybe I'm on your team. Maybe I'm your passive real estate and syndication company that's got the deals that will bring to you that you can look at. You want to have a good business attorney, obviously, because you want your business attorney to review all of the documentation. So those are practical things that someone who's starting out, who's never done this before and doesn't want to really, fear, what do I need to do? How do I start? Who would I need? Build that team of professionals, and that's a great start. You're going to need them anyway, so might as well have them now.
That's so well said. And so, John, with the caveat that this isn't individualized guidance, this is education, but clearly you have family, friends, clients that are asking you, John, what should I do? What guidance are you giving them?
Yeah, I'd recommend that they make sure they do their research if they're going to do stocks or REITs, or if they're going to invest with a property management business that's getting into a cash flow opportunity where they're making cash flow quarterly. Just do your research. Look into the...
In times of turmoil, guidance from successful investors and the wealthy is critical for your success. Subscribe to our premium content to ensure you are well equipped for the growing crisis. Tell us just briefly, how do people get in touch with you?
Yeah, the best way is we have a great website. That's kind of our central point. It's just JID Investments.com. We're also on LinkedIn.
There are more investing secrets that are quite powerful for you to build your wealth. If you'd like a VIP introduction to any one of our experts, click on the link below. Make sure you subscribe so you don't miss a single tip from any of our seasoned experts. Okay. Watch the next video so you can capture our next secrets to investing. If you're ready, it's time for you to experience financial freedom.
The information contained in this episode are opinions not to be used as individual guidance. As always, consult your own financial team for your investment decisions.